Hi, ladies and gentlemen. It's Edgar Rafael, and I'm very happy to get back into what I do best, what I love to do. And you know what? I'm here today for trading. Last week I didn't do any I didn't record any video because I was super busy. But today I'm super happy and free of time, and this absolutely is a free of charge kind of video. Just it teaches you how to trade, look at the technical analysis, and how you can digest fundamentals. Combining both of these particular tools and get out of the best trades. Now, remember, guys, this is educational purpose video. It's not a signal providing service, and it's for all of you out there who really want to start trading, who wants to learn how to trade. But I find that it's a bit expensive to enroll in any educational trading courses. Now, this one is purposely for you guys, and there's no discretion who's going to watch it, who's not going to watch it. It's free of charge. Now, starting with today, I'm gonna crack on with the fundamentals first. So looking at the coming week, we expect more PMIs and NFP news, and I think in New Zealand, rate decision is going to be next week. We've seen a massive drop in New Zealand against the dollar for the past few months, and probably this might be the resurrection of the New Zealand economy. Remember, guys, New Zealand economy and Australia has been highly affected by the trade wars. Remember that China is a massive investor in these two countries. So anything happens between China and US, it has a ripple effect to these two countries. Now that's how fundamentals are, and that's how I look at the market. Probably never knew that, but please, you need to understand that before you open any trade. So NFP. What we look for the NFP is that it has been a really good run for the US economy, but we've seen it's quite a slight downtake of the NFP last month. But the impressive news was we saw a 0.4% month-over-month with growth, of which is quite important, judging the fact that there's a massive increase of earnings after decrease in tax in the US and in the US firms. So now the companies now start to act and try to diffuse or to distribute the return to the wages. Now we've seen a wage growth, which is quite important, and if there's a wage growth in the economy, it's a positive thing, guys. So expect more and more productivity in the economy, expect more investments. That's good. That's really good. But there's something that's gonna happen, and I think even more so, novice traders already know about this. Is if you look at the February condition, the way the rise of bond yields could affect the equity, we expect this gonna happen these times as well, and probably within a month. Now, if that happens, it's a clear indicator that the US economy is going down. Now, I'm not saying I'm gonna predict this is gonna happen, but I'm just saying, judging from the technical and fundamental side of it, it has a higher percent of rate chances of this to happen, and every time it happens, you're seeing a correction in any given economy, just like Euro. Probably might happen for the US as well this time soon. So another political uncertainty in the US is that is the Democratic Party is getting more ground in the Senate House. So there's something called the blue wave. Now, should the Democrats take the House of the Senate, that could affect Donald Trump agenda. Now, if that's going to affect Donald Trump agenda, things like trade might kind of smooth down a little bit, and we could see a normalization in the market anytime soon. So after saying that, we're gonna look at the some company earnings review. I'm gonna highlight only one, which is quite cool, and that is Tesco. Tesco's had good run since last year with up 30%. Now last month it was a 7% chance. It's not 7% chance. It's a 7% drop in earnings last month. And wow, the reason for that was there was a lot of accounting scandals. There was rise of discounts from Lidl and Aldo. Remember guys, Lidl and Aldo, they merged, so there's a lot of power and they have a lot of economies of scale, so they can stretch the price. No, they can squeeze the price, which can be quite competitive against the Tesco's prices. As I said earlier, there's a Brexit issue, and now how the Tesco's is trying to combat all these issues is by rising the Jack's discount stores across the country. But yet the share kind of dropped, and I think the investors are not buying into it. So having looked at the technical, having looked at the fundamentals of the coming week, let's jump on straight to the technical analysis. Now you guys might already know my method of trading. I trade price action, I trade which includes volume, momentum, and direction, or the trend of the price of the particular security, either it is a stock, or is a forex pair, or is a goddamn bond, who knows. But I just look at the price action, I look at those support and resistances, I play with them properly. If there's a breakout, if there's a retest, I know I'm going to position myself, and that gives me a really good risk reward adjustment. Now naongea Kiswahili pia, kwa hiyo kama uko unasikiliza hii video kuanzia mwanzoni kwa Kiingereza na ukaambia kuona kama ina kuchanganya kidogo, niulize swali kwa Kiswahili nitakujibu kwa Kiswahili. So that's how it's gonna be. So where are we? So we always start with the DXY, the US dollar currency index. Now this is a 1 daily time frame. Alright, this is daily time frame. Always look at the daily time frame, because it gives you a perspective of how the price is moving towards the week and how it's gonna close to the end of the week. So if you use the daily time frame, it's a very good time frame. Lots of novice traders use this. Alright, use this to make the market decisions. If you use weekly, it can take months for that what you're looking for to happen. Or if you look at monthly, that can happen in years. So yeah, it's quite relative to how relative and quite confusing, because you expect the time frame to happen in a day wise. It happens in 1 day, but that's not the case. So daily time frame has an effect on it kind of not exposed, but kind of, let's say it happens in 1 week. That's how I see it. Alright, let's look at the DXY. DXY has just broken back to this resistance line, significant level. From since the 6th September this year, it just entered that zone. Now, saying that this appreciation in the dollar is quite clear that the market is going to retest here. See, the market has really retested. Now we're testing on the other side. Now we're on the other side. Now the price action is on the other side. Now whatever I'm going to trade on this week, guys, kile ninachoshiriki katika wiki hii kitakuwa based on dollar. Dola inapoenda ndio huko nitakuwa napoenda. Umesikia jamani? So wangwana. Kwa hiyo hapa nachanganyeni kwamba EURUSD, AUD, GBP/USD, gold. Tangalie ni jinsi gani ninavyoweza kuingia based on hii dollar index. na dollar index sasa hivi shangaa katika level mpya. Hii level mpya ambayo inanipa confidence kwamba price imesha bounce hapa kama unavyoona inaenda juu. Kwa hiyo I'll be looking for shorting positions in any given pair against the US dollar. So USD for short positions, what's it called? GBP USD, Aussie dollar, gold as well. So whatever. Now, after saying that, let's jump on to EURUSD. EURUSD, it has dropped massively from its aggressive appreciation since 7th September and since 13th of August. Now we have hit the new the highest tops here. You can see the lower lows coming in the markets, which shows us the bears are getting back to the markets, trying to suppress the price appreciation and bring in the new perspective to the market. Now, guys, look at this consolidation. The market tried to bounce through these levels, but it couldn't. So we see now, this is what I'll talk about: breakouts, resistance, and support level. If you look at the this support line here, crap. Alright, this is a support line, this is a resistance line. Now the market just entered the consolidation zone since 20th September, so just almost of the last week, all of it, the market was here. Now it kind of bounces back, up, bounces back, up, bounces back. Now it continuously tests this support resistance level, and the breakout never happened. Now, if that's the case, you see all these kind of dojis here. It gives an indication that the price is gonna correct itself back. Now, you don't enter first to the market, you don't enter first to the trade, because it might still consolidate here. And if you enter, jump in, you might break out, and you can see continuous price action. But here, this was our entry level, this was the entry point for last week. Look at that. I'm gonna show the market right here at 1.17353 all the way down while I'm scaling out, so I have my take profit on every. So I'm looking for gaps. Where's my next gap? I'll suspend. The next gap might be here. I'll put I put my first TP, my take profit here, and then I move to my next TP around here. So I'm gonna have to take profit, which are gonna have massive return to me. And if you look at it, let's look how risk reward measurement plays out, guys. This is so beautiful. You're gonna argue with me, but a lot of this trader is looking for the risk reward ratio, the lower lows, right? The momentum and the price action and the breakouts. Look at the risk reward here. It's 2.64 with the stop loss, of 0.49% and the target price of 1.30%. Guys, there's nothing better than this in trading. Alright? There's nothing better than this. And this is what we're looking for, the opportunities in the market. Now, this could be opposite. Sometimes the market might break out this support level, and this is how lots of traders lose their money. They say, oh, this is the highest level, so the market should reverse. No, not at all. Let's look at the US oil. US oil last week, it reached one of its highest levels. These levels here. I'm 100% sure. A lot of traders traded here. They shorted this market. You can see there's a bit of bears coming in the market, but they don't have a chance. They don't stand a chance because we have institutional traders, institutional investors who have a massive position in this commodity, and they cannot wind up in that massive position in one day. It might take them few days to wind up that position, and if that happens, we'll see a massive spill of this commodity price. Now, it broke out this, as you can see here, it broke out this, resistance level, and it keeps on going up. Probably you're one of those traders again. You put your entry level here, expecting the price might go down. That's gambling right there. You're trading against the probabilities. Yeah, I mean the probabilities are with you, but it doesn't mean it's gonna happen. So try to squeeze out all those negative factors when you're trading. Probability, yes, it's gonna reverse. Yes, but that's not always the case. Now, how you're going to position yourself for this coming short is to look for that retest. No, not a retest. The bounce back from the resistance level, this one, and then you look for a breakout of the support level. There might be a consolidation happening there for like 2 to 3 days, and as soon as that breakout happens, all the retest on the upper side, boom, that's your trade. You get that. You don't talk about trade yako na si vingine. Okay, let's look at gold. Same happened to gold. Me, like, this is what all those traders make mistakes. Mtu anaika hapa entry level yake and expect the market to go back up, but that's not the case. That's not the case. The bears have more power, and remember guys, this is being detected. Not detected. It's being detected by BXY currency index. The dollar is the mother of the whole pair of all currencies in the world. Dollar is the king, right? So, seeing the dollar is the king, look here. In a breakout, you can find a consolidation happen, and then there's a massive at the end of last week. I think it was around Friday. You see this massive bull rise, and I think that was just a psychological return of the gold. I think that was just psychological. It's how traders reassess their positions by looking at technical level. But for me, I don't think it had any meaning. So the way I see it for the coming week, in here. Oops. Do you see this? Oh, love it. I just love this. Look at that. So there's a massive downward trend. Look at the confluency. This acts, which was a support level, now acts as a resistance level, and the market is just retracing from that level, and it's having hard time to break out. But in the breakout here, I'm gonna buy any breakout from the downside here. I'm gonna short, but remember guys, there's a possibility of it to keep on going down, judging from how gold is performing. Number one, there's a confluency, the price action. Number two, there is a resistance level on the top. Number three. Number four, in combat, if you see the lower lows and lower highs, that one is confusing. See, lower lows, double tops. That's number 5 again, and then see lower lows, and then it broke out this mini support level. Now we're testing the other side, and the market is trying to retest here, and then possibility to keep on going down. That's how I see it. But if it breaks out, we might expect to see an upward. So, but I just see there's a correction. There's a correction coming. I'm 100% sure about that. So there's accuracy about I'm not saying I'm accurate 100%, but I just training from experience and training from my mentors strategy. This is what they're looking for. They're looking for volume. They're looking for the test of the other side. Those kind of stuff. But I don't take a lot of your time. I don't want to make this video too long. But yeah, there's a lot of opportunities coming this week, and please check them out, and just try to base your analysis based on the dollar currency. Dollar currency is the mother